The September Federal Reserve meeting could reset the entire stock market. In just 4 minutes, let's break down why this moment matters, what traders should watch, and the risks you need to keep in mind. Here's the setup. Inflation has cooled from last year's highs, but growth is slowing. That leaves the Fed in the hot seat. A single decision in September can shift interest rates, bond yields, and stock valuations, all within hours. Remember, in 2022 and 2023, every Fed move caused ripple effects. One press conference alone sparked a 5% swing in the S&P. That's why traders, and Wall Street itself, are glued to Powell's words this month. Here's a simple framework to connect Fed policy to stocks. 1. Inflation tells us how much pressure the Fed feels to act. 2. Rates determine borrowing costs, which shape valuations. 3. Earnings are the bridge. Higher costs can squeeze profits or they can prove resilience. Swing traders should especially watch tech, which is sensitive to rates, and defensives, which investors often treat as safe havens. But it's not all opportunity. There are real risks here. Valuation traps. If the market assumes cuts too soon, some stocks look cheaper than they really are. Liquidity crunch. Higher for longer rates could drain capital from risk assets. Macro shocks. Oil prices, geopolitics, or even global growth can override the Fed's script. So what should you actually watch? Not just the rate decision, but Powell's tone, the dot plot, and the exact wording of the statement. Markets can swing just as much on a single phrase as on a rate move. If you want calm, data-driven breakdowns like this every week, hit subscribe. And tell me in the comments, do you expect the Fed to hike, pause, or cut this September?